Do you know that traders using the flip zone model have reported increasing their win rate and hit rate by up to 40%? I want you to stick around to the end of this video and I will show you how you also can boost your profitability with this powerful smart money concept strategy. I am the Anointed FX, and in today's video we will dive into what flip zone model is, and it's a game-changing strategy for trading the synthetic indices market. So in this video we will look into what is flip zone model, the flip zone model itself, and how it works, and how you also can make use of it to increase your hit rate, your win rate, and most importantly your profitability. So let's get started. So as you can see, the textbook example that I have before your screen. All right, so but before we go straight into that, what is the flip zone? Okay, flip zone model is the interaction or exchange between supply to demand or demand to supply. Okay, so which means that there is an interaction and also an exchange. Note the word interaction and exchange. Okay, but let me give you a little tip, because I don't want this video to be too long, and as much as possible I want to show you an example from the chart. Okay, you want to watch out for supply to demand flip, all right, in an uptrend continuation, and also you want to watch out for what demand to supply flip in a downtrend continuation. Okay, you know that we have two components of market structure. All right, there is a substructure and also the minor structure. So in an uptrend, the substructure follows the expansion of price, while the minor structure follows the correction. So as the minor structure is entering or getting close to your higher time frame zone or your higher time frame level, the demand level, you want to watch out for supply to demand flip, because your minor structure will be entering that higher time frame level in a form of a trend. Is as simple as that. So that's number one tip that I want to give to you. You want to watch out for your supply to demand flip in an uptrend continuation, and also your demand to supply in a downtrend continuation. Okay, so let's head straight into this. So I belong to a school of thought that understand the concept before the practical. So if you bring that into the forex market, understand the concept behind it before the strategy, or understand the concept before the application. So I want to go into the concept of the flip zone, the supply to demand flip, and also the demand to supply flip. Okay, so what is the concept behind it? What do you want to see? As I've said, I've given you a tip about where you apply them. Okay, but I want to just independently explain what these two things are. All right, so you want to see a failure, you want to see a valid supply, okay, and you want to wait for price to retrace or correct back into that supply, give you a proper reaction, then a failure. Don't forget that we said that flip zone, all right, is the interaction or exchange between the supply and the demand. So you want to see this interaction occur, and one of the interaction is what you want to see: a reaction from the valid supply zone. Okay, it could be the higher time frame, it could be lower time frame. All right, it is independent of that. Okay, so you want to see a failed supply and a reaction from that supply, then a break of structure. So the demand that was responsible for the break of that valid supply becomes your supply to demand flip. Okay, so let me go over that once again. I said understand the concept before the application, or the concept before the strategy itself. So what is the concept behind the flip zone model? Okay, you want to see a valid supply like this. Okay, you want to see a valid supply like this. Okay, and you see there are components of a valid supply. One of them is what? It have to break structure. There needs to be imbalance or liquidity void below that. You understand? And that should be towards the trend also. You understand what I'm saying? So I'm not going to cover that in this video. I just want to stick to the flip zone. So you want to see a valid a valid supply. Then you want to see how price is going to approach that zone, give you a reaction, then a break of that valid supply. So hence that's why I wrote failed supply here. So you want to see that failure of that particular supply, then you wait for this supply to demand flip. This is going to be your entry zone. is going to be your entry level. That demand that was responsible for the failed supply is going to be your what? Your entry zone. That is the exact zone that will be called your supply to demand flip. Okay, so then also, sorry that I'm rushing, I don't want this video to be too long, and I also want to be very make it educative as much as I can. So let's go to demand to supply also. All right, so for the demand to supply, you want to see a valid what? A valid demand. Okay, you want to see a valid demand, you want to see a proper reaction from that valid demand, then a break of that particular demand zone. So the demand, I mean the supply zone that is responsible for the break of that demand zone becomes your what? Your demand to supply flip. Do you understand that? So I will go over that once again, both the supply to demand flip and demand supply flip, then we'll head straight into the chart example. Okay, so you want to see what? You want to see a major zone, a major supply zone, a proper reaction from that supply zone, then a break or a failure of that supply zone. Then what? You make your entry at the demand zone that was responsible for the break of the supply zone. So why also for the demand to supply flip? Okay, you want to see a reaction coming out of a valid demand zone. Okay, then a break of that or a failure of that demand zone. Then at price, you want to wait for price to come back into that demand to supply flip, and you make your entry from there. So let's head straight to the trade example. Okay, so this is the volatility 10 index chart of the Deriv market. Fortunately, the Deriv trading view does not have a replay tool, so we will not be able to use that tool. So but please just follow me as we make do of the application of what I said as regards the demand to supply flip and supply to demand flip. All right, and when I began, I said one tip to you. I said you want to make use of the demand to supply flip where on the downtrend continuation. So for this particular example, we want to use the downtrend, and we'll be watching how to use the demand to supply flip. So let's analyze this guy together. All right, the VIX 10 market. So what do we have before us? Okay, we have this high, I mean this low taken out, okay, to be our change of character. Okay, to be our change of character. I click on OK. Then I want to bring that one to be on the downside, and this particular website trading view does not have a saving option also, so I have to just keep typing those things one after the other. So we know that we are in a downtrend, the other flow is to the downside. Okay, so but however, let's go to the recent price action. Okay, let's go to the recent price action so as not to waste so much of our time. We are in a downtrend, okay, for this particular 1 hour VIX 10. So what did we have for the current price action? We have what? We have this high. Okay, we have this liquidity, inducement liquidity taken out. Then so let me just limit that for us to be liquidity. Then we had the break of structure to downside following that expansion of price. Okay, BOS, sorry, break of structure to the bottom. So okay, so we know that our last break of structure on the 1 hour time frame is to the downside. So our expectation of order flow is what? A correction, then a continuation. So okay, so let me just change this guy's color to red. Okay, just give me a minute. Okay, so let's choose the red. Okay, so we are expecting a correction, then a continuation, or correction and expansion. So however, this zone here is a very good zone for us to sell from. Okay, so let me change that color also to a very good one. Let's change to like red. Okay, so that it can be obvious. So this is our 1 hour supply. This is our 1 hour supply zone. Okay, so which also should be from this swing high to this swing low. It's also forced to be in our what? In our discount price. Okay, so let's head straight to the 5 minutes time frame so that we can see the application of the demand to supply flip. Very beautiful and powerful. It's a very, very beautiful and powerful strategy that is going to definitely make you profitable in no time. In no time. All you have to do is put in the work and you enjoy. All right. So this is price coming into our 1 hour zone. Okay. So following the price, we had price sweep this liquidity. All right. So let's take this as our liquidity. Okay, so we have this to be our liquidity to the upside, then price entering our zone, approaching our zone in form of what? A trend. So we had our change of character with this low, or you can use even this small guy here. Let's even use this. This is our change of character. These are actual change of character that's also informed us that the substructure is now ready to give us what we are waiting for on the 5 minutes time frame. Okay. So we had this change of character. Let me just bring this guy down. Okay, so we had a change of character to the downside, but how do we use our flip? Okay, if you look at this particular swing, this was a swing high, a swing low, and a swing high. Okay, are you seeing that? This is a valid a valid swing. Okay, so however, look at this particular guy. There was a zone that it was reacting from so strong. Okay, there is a valid a valid supply, a valid demand. This indecision candle that is here. So I'll just change this color back to to this guy. Then I will call this guy 5 minute demand, 5 minute demand. Let's call this 5 minute demand. Okay, so we have our 5 minute demand and we have a proper mitigation of that particular guy. But what did we see? We had the failure of that zone, giving us a break of structure. Okay, so we had a break of structure to the bottom, then boom. So what do you want to do according to the concept of the demand to supply flip? You want to see a demand that bring about a proper mitigation of that particular demand or reaction, then a failure of that zone. So where is the failure of the zone or the main supply? Look at it. Price took out this particular low aggressively, then we are expecting a reversal. So how are you going to go about it? So Ctrl Z. So which makes this particular zone your demand to supply flip. So this is automatically our demand to supply flip, because this was a supply that was responsible for for the break. So let's just extend this a little bit. Yeah, so this was because we have this nice indecision candle here also that we can use as our entry. Okay, this is a nice indecision candle we can use as our entry. So we had number one, price overall, the overall trend of the market was is a downtrend. So we're expecting price to enter into our higher time frame supply zone. Then we want to watch out for a flip. Okay, and also in addition to that, increasing our confidence, we had also a change of character on the 5 minutes time frame. Price also is already printing higher high, higher low. Okay, and for the matter of fact, we even had this particular demand that came from this 5 minute demand zone. It swept liquidity. Sorry. Okay, so let's just do this. It swept liquidity to the upside. Okay, so yeah, so this is what we had. Price came up, failed people, just faked people, trapped people here to buy, then boom, price came to the downside. So this level, this 5 minute zone automatically qualify to be our demand to supply flip. So we'll say this is our 5 minute demand to supply flip. So what do you want to do? You want to set your limits order here and wait for price to come in here, put your stop loss above a little bit, and target your 1:3, 1:5, whatever that you want to target. So this is a very, very beautiful trade and a practical example of what a flip zone is. So I want you to watch out for the second part of this video, where I'll be explaining more detail. It's going to be more of charts. We'll be looking into more examples, both the supply to demand flip and also the demand to supply flip also. But this is a typical example of a demand to supply flip. Very, very easy. No confusion. It is straightforward. You just have to identify a strong supply or a valid supply, a valid demand zone where you want to see a reaction and a failure of that particular zone. So the flip zone, all right, it requires practice and consistency. So you just have to put in your chart work over and over again, practice this particular concept until you are able to seamlessly seal see this zone on your chart and trade effortlessly, and trust me, it's definitely going to increase your hit rate in the market. You also be patient for high probability trades, which also on the long run is going to make you to become a successful and profitable forex trader. Have you tried using the flip zone model before? Please let me know in the comment section how that have worked out for you. And if you have any question, please feel free to reach out to me in the comment, and I will ensure that I give my response in time. And please, if you found this video very helpful for you, please do well to give it a like, and also your thumbs up, and also share to your family and friends and forex trader friends that will find this video also beneficial for them, and ensure that you turn on the notification bell so that when I upload videos like this, you will be the first to be notified. So the Anointed FX signing out.